Hello traders and welcome to today's video. I want us to discuss about volatility, and if it's your very first time to hear about volatility, this is what drives the market. Are we together? Volatility, just as a car requires or use fuel to move, the market needs a volatility to move. Volatility is like a booster, what the market needs for it to move to your direction. Whether it's a buy or sell, the market requires a volatility. Are we together? We have so many types of volatility, but today I want us to discuss about 4 types of volatility. The first type of volatility is equal highs. I'm sure if you've been trading if you've been scrolling at the trading view, you've come across the market with equal levels. The highs are equal, and you take your trades from there, then the trade ends up hitting stop loss. It's because you took the trade at the wrong time. Are we together? So the first type of volatility is equal high. The second one is equal low. The third one is trend line liquidity. And the fourth one is your capital. I'm sure when you hit a stop loss, you ask yourself where you went wrong. Sometimes you even like, anytime I place a trade, the market goes against my direction. But if I don't place the trade, the market goes well. It's not because the market is against you. The market doesn't know you. You only known by your broker, and he just knows your details. So just know, if you take a trade when the market has no liquidity, it means once you take the trade, the market will sweep your stop loss, use it as a booster to move, then move to your previous direction. Are we together? So I want us to start by discussing equal highs. What are equal highs? Equal highs is when you enter the market and you realize that the market has been tapping a certain level and going back. It goes up again, taps the same level and goes back. Taps again and goes back. It can do it not less than 2 times. It has to tap not less than 2 times, and this how equal highs look like. The market has to tap up to more than 2 times, and for the market to to move from that liquidity, it has to break the structure from the upside or the downside. Are we together? So I know many people take their trades when the market is ranging, because you predict or you assume that if the market went up and came back, it's most likely to go up and come back again. Then for me, I call that scalping, because how about if the market goes through, whether to the upside or to the downside? It means that your stop loss will be hit, and just know that your stop loss is one of the liquidity types, and we don't want our stop loss to be hit. It's okay to make loss in trading. It's okay to hit stop loss in forex trading, but remember, you only count yourself profitable once your profits surpass your losses. Okay, so let me show you an example of equal highs. As you can see here, the market tapped up, went down, tapped up again, and went down or came down. So for someone who took the trade from this level, whether you are buying or you are selling, believe me, if you are selling, the market took you out because it ended up buying. If you are selling, the market, of course, changed direction. So what I can advise, if you see a market is ranging, just keep off. Are we together? If the market is ranging, keep off until you get a clear structure. For me, I only trade trending market, whether it's either an uptrend or a downtrend. Are we together? So let's look at down equal low liquidity. Equal low liquidity, it means that the market came down to a certain level, pushed up, pulled back again to the same level, pushed up, and I know many other times many traders are tricked by the market to take their trades at this level, but just know that taking your trade at this level, you'll end up hitting a stop loss, whether you like it or not. But remember, we have so many types of strategies when it comes to forex trading, and if taking your trades at these zones work for you, go for it. But for me, I use SMC strategy, and for me, I consider this as liquidity too. Okay, so let's scroll as I try and see where I can show you an example of equal low liquidity. Remember, the tapping doesn't matter how many times the market has tapped. As long as it's more than one time, or as long as it's more than once, just know that's liquidity, because the market needs that fuel to move. Look at this. The market was moving to no direction. Up, coming back, though the levels are not equal. Remember, once the market reached that level, for someone who was selling, their trade was taken out, and that's why you can see the market ended up buying to the upside. So let's scroll again and see if we can get a better example of equal low. What I can tell you, equal low and equal high are more or less the same, because as long as the market is tapping a certain level and coming back, doing the same and coming back, and you find that the lows are the same or the lows are equal, just know that's liquidity, or it's a trap that the market wants you to take that trade, so that after you've placed your trade and your stop loss acts as a booster to move the market. Okay, so let's check the third example, which is trend line liquidity. Trend line liquidity is whereby the market moves, whereby you can use a trend line to draw a straight line. Okay, so for me, I use SMC strategy, and for me to take a trade, I have to make sure that all my confluences are available. If you want to know my confluences or what I look up to in the market before I place a trade, you can comment on the comment section, then I will definitely do a video on the same. Okay, so remember also to follow me on TikTok. I'm on TikTok with the same name, Instagram with the same name, Facebook with the same name. So in short, in all my social media platforms, I am joining with the same names. You can consider giving me a follow. Okay, so don't jump into this trade. This is a trade I'm analyzing on US 30, and for me to take a buy on this level, it's so risky. I'm not gonna risk this. I'm going to wait for the market to go down to the farthest level. That's where I'm gonna place my trade, and that's how I just do in the market. All I do is analyzing the market and let the market come to me. I don't chase the market, because I know the frustration that comes when you spend a whole day without a trade, especially when you're a beginner. Because when we are beginners, you think you're going to analyze the market, get trades every single day, make money every single day, and when you start making losses, you're like, okay, I think these people lied to me, or these people are scammers. I've seen so many people online calling traders scammers. Yes, we have scammers. In every field, we must have scammers. But believe you me, out of the scammers, we also have good traders. It's only that some of the traders or your trainers teach you or lie to you that you're going to make money immediately. But believe you me, this is not a get quick thing. It's going to take you years and years of hard work. Then eventually you'll start making money. And it's so funny, in a country like Kenya, around 30% of the citizens who look like people who are enlightened, They think Forex is a scam. So don't be distracted by the noise. Some of them are people who are doing Forex on the background. Others are training to start Forex trading. And others are actually in the game and they are frustrated by the market, okay? So they air their frustrations out there to everybody so that at least you get distracted, you don't take the trade, you don't want to learn because you think you're gonna be scammed. Where on earth do you get free education? Where on earth do you get free knowledge? Have never heard of such. So as long as you want to be trained about Forex, let no one lie to you that they're gonna train you for free, not unless they are friends, your friends or your family, or I don't know if there's anyone who can do it for free. And something else, be ready to pay for classes. After you paid for classes, it doesn't mean that you'll go straight to start making money. You have to go and pay another money for mentorship. So just training alone is not enough. Train and pay for mentorship. Get someone who is in the game to mentor you for a month or for whichever duration that you want, and you'll see things work with you with time, okay? So Forex is not something you learn and make money. Get it from me. It will take you 2, 3, 4, 5, and I'm talking of years, okay? So back to our topic. This is trend line liquidity, and it's my hope that you've learned something today. We have liquidity. Just to wrap up, let me say we have 4 types of liquidity. We have inducement liquidity. Inducement liquidity is whereby you see, if you're taking a buy, the market pretends to be buying. Then all of a sudden it goes back, clears you out, taps to a different point of interest that was below your point, and push up again, okay? So we have inducement liquidity. We have equal high, equal low. We have your money or your capital, which can still act as liquidity, okay? So thanks a lot for watching the video up to this point. Make sure you watch the video again and again for it to sink in you. Practice as much as you can. Take your journey as something personal. Don't compare yourself with anyone. And at the end of the day, you will become profitable, okay? Bye for today. In case you're not subscribed to my channel, make sure that you subscribe and turn on that bell so that anytime I upload a new video, you'll be among the first people to watch. Bye.